Hi, I'm Maurice Jackson alongside Rick Rules, Chairman of Sprott U.S. Holdings, and we're here live at Freedom Fest in Las Vegas. Rick, how are you doing today?
Fine, Maurice. Thanks for giving me the opportunity.
Well, thank you as well. Rick, you're one of the featured speakers here today. You mind sharing with the audience what it is you've been talking about?
Well, this morning's presentation was an introductory presentation, and I talked about the difference between prediction and preparation. At a conference like this, you have a lot of what I laughingly call big thinkers, people who make predictions in the future, and I was trying to point out to people that while they're interested in that as a topic, it's more for entertainment than for making money. I pointed out that Mark Skousen, who runs this conference and is in the prediction business, has said to err is human, but to be paid for it is divine.
Yes, it is.
And then, of course, moving on to Warren Buffett, who said that trying to make market predictions is the equivalent of trying to know the unknowable because of the enormous amount of variables that go into a market. So my point was simply that rather than look for accuracy in prediction, either in terms of outcome or in terms of time, a better investment strategy is to prepare and insure, if you will, against a series of contingencies based on probabilities. That was the nature of the discussion.
And it's simple, it's so profound though, and I think a lot of times investors overlook it. They're following an expert and they delve all into the thesis, but they're not niche specific in what they should be doing, as you indicated.
Right.
You must be prepared. For the Sprott family, you mind sharing your thoughts on uranium?
Yeah, I think it's fair to say that I was a bit early in the uranium trade. I had anticipated that a commodity that is produced that or sold that far below production cost has to go up in price, and it does, but it doesn't have to go up in price soon.
Rick, you mind sharing your thoughts on water rights right now?
Absolutely. As I was pointing out to you earlier, I've worked 25 years in water to be an overnight success now that there's a drought. Investors need to know that water rights have been under accumulation in the West and the Southwest for a couple of decades, and there's not very many good water rights left to buy. Most investors probably should participate in the water market if they choose to by owning shares in the large publicly traded farming companies that own water rights as a part of the process of producing agricultural commodities. Investors need to know that the water price isn't always the price determined for those stocks. Boswell is an example. A big water rights owner is the largest cotton grower in the world, and despite the fact that the water's worth more, ironically, the cotton price is down, the price of Boswell is down. Probably a good long-term play on water, but you have to suffer through the volatility of the cotton price to get there.
As well as I noticed with Limonera, lemons and lime,
yes.
there's and Pico. Yes. Recently, did they not dissolve some of their, or liquidate some of their positions in water rights?
Pico has done a good job of buying water rights cheaply, perfecting them, and they have sold a bunch back in the market. It looks like, in retrospect, perhaps they sold too soon, but it's worth noting that they booked a $60 or $70 million profit. It's maybe never too soon to take $60 or $70 million off the table.
And I must admit, you're the first one I've ever heard mention water rights, and I heard you mention them about 3 years ago, and now you hear droughts.
Right.
You see it now in the mainstream media, but you heard it first here years ago from Rick Rule.
That is accurate.
If I may, would you like to discuss platinum and palladium?
Happy to.
It was one of my favorites.
Yeah, I mean, the platinum thesis is very much intact. The problem with the platinum market is global industrial demand is soft. On a worldwide basis, the automobile fleets are the oldest in recorded history. Part of that is because cars get better and better. But part of it is because workers' disposable incomes around the world are lousy. For all the vaunted progress that the U.S. economy has made, it's made it off a deep, deep bottom. And we haven't seen real improvement in auto sales. Certainly they're better this year than last year, but last year was a record low. We haven't seen improvement in the European or Japanese auto demand. Chinese auto demand, while it's still growing, is growing much more slowly than it grew before. And platinum and palladium are primarily used as auto catalysts.
Yes,
new car sales are very, very important.
Yes, they are. But although the market is being depressed, or the price of platinum palladium is being depressed, for me personally, this is a great buying opportunity. And again, a great symbol to purchase is SPPP, which is Sprott Physical Platinum and Palladium. How about oil? Any thoughts on oil right now?
Yeah, the oil market's really interesting and really topical. It's a good time to ask the question because your listeners will listen to the answer. The oil market was described as oversupplied, with additional United States crude coming from fracking. The truth was that production increases in the United States were met by production decreases. in places like Mexico and Venezuela, where state-owned oil companies hadn't invested sufficiently to maintain production. What's missing in oil is the same thing that's missing in platinum and uranium: demand. On a global basis, demand is very, very weak. Now, the oil market is really, really interesting. At today's price for oil, 54, 55 bucks, the industry on a global basis does not earn its cost of capital. In other words, it makes oil for 62 bucks, sells it for 54 bucks, and tries to make it up on volume. They can do that for a while because the business got so overcapitalized in 10 good years. They can actually, for some period of time, produce below total cost of production. This oil bear market will change one of two ways. Demand creation, because if you take the oil price to the $65 to $75 range, the industry can earn its cost of capital. But if the oil price stays at this level for another 2 years, you'll begin to destroy supply. Ironically, demand creation, where you get paid sooner, means there's a lower ultimate increase in the oil price. Supply destruction means that the market turns later, but it turns much more violently. The bull market that you saw in oil in the early part of the last decade was an example of that. There had been very low oil prices for a long time, and we destroyed productive capacity. When third world markets, emerging markets, came into the market, China and India as an example, and demand for oil increased, there was not the ability in the near term to increase supply, and so supplies got rationed by price. We had a price spike. What's going to happen now, I mean, the bottom line is, if you get the oil price in the $65 to $75 range, 5 years from now, the oil price will be $75 to $85, a moderate increase. If you keep the oil price in the $50 range, 5 years from now, oil will be $125 because you'll do things like shut in the whole North Sea. So it'll be a very, very interesting circumstance.
What are the latest developments at Sprott that really have you excited?
You know, what we're really doing at Sprott, I guess one of the things that's interesting at Sprott is, of course, that we're tendering for a competitor's physical product, the Central Gold Trust units on the New York Stock Exchange. We believe, and I think the market believes, that we have a superior product. Hopefully we'll be successful in that tender. The passive market generally has been good for us. Our physical trusts, of course, are off with the market being off. But the franchise in the Sprott Physical Gold, the Sprott Physical Silver, Sprott Physical Platinum, and Palladium is a franchise that has proven itself in the market, that the investors like. And it's my belief that the precious metals markets will do not merely better, but substantially better than they're doing right now, which will benefit, of course, the investors and benefit Sprott. We're also now in the exchange-traded fund business with the Sprott Gold Miners Index and the Sprott Junior Gold Miners Index, and that's been remarkably successful. The Sprott Gold Miners Index, the SGDM, launched in the middle of last year, and despite a June launch, and despite being in the gold mining sector, which was a poorly performing sector in the market, we were the 9th most successful ETF product launch in the United States last year, which I think says something for the Sprott brand and the
quite impressive.
The good feeling that gold investors have for Sprott. So we're very excited about our passives business. The other thing is that everyone at Sprott remembers very well how difficult the last bear market was for us, the 1998 to 2002 bear market. And we remember what happened as a consequence of persevering through that market. The bear market of 2000 ushered in the bull market of 2002 and 2003, and the returns that we enjoyed as a consequence of sticking to our knitting and investing consciously at the bottom of the market in some of the best companies created one of the most spectacular financial events of my life. I can't tell you when this bear market's going to turn, but I can tell you that this has been a deep and vicious bear market, and bear markets are the authors of bull markets. Obviously, I'm tired of this bear market like everybody else. I wish it were over, but I really, really believe 5 years from now we're going to look back at today and the pricing that exists today. We say, God, those were the good old days.
Exactly. I've heard you mention that several times. I thoroughly believe that these are the good old days right now. If you're looking to purchase anything in natural resources, come talk to the experts who are right here. Sprott, U.S. Holdings, SprottGlobal.com. Rick, would you like to mention also something about your newsletter? And how about Sprott, if we can, before the newsletter? Let's talk about Sprott, the company itself.
Well, Sprott Inc. is a publicly traded Canadian domiciled company. The symbol is SII on the Toronto Stock Exchange, SPOXF.
Yes.
In the U.S. over-the-counter market. We manage about $7.5 billion. We administer another $1.5 billion, most of that in natural resources. Unlike many of our competitors, we eat our own cooking. So Sprott, unlike many financial service competitors, is fairly well capitalized. We have about $350 million in working capital. We have no net debt. We pay a 4.6% dividend. And my suspicion is, as we move into the next bull market, the accumulation of talent and the accumulation of capital at Sprott and the strength of the Sprott brand is such that we'll be a real market leader.
That's quite impressive. In a secular bull market, but the cycle right now is you're in a bear cycle in that secular bull market, and you're giving a 4% dividend.
That's correct. And earning it, not borrowing it.
Yes. And how about Sprott's thoughts? Would you mind sharing that?
Yeah, absolutely. All of you who are listening to this, I encourage you to go to our website, which is www.sprottglobal.com, and click on subscribe. You'll receive in your inbox Sprott's Thoughts, which represents 3 times a week the best information and ideas from inside and outside the Sprott organization. I guarantee you'll get your money's worth because it's absolutely free. You can also go to www.sprottsthoughts.com and short-circuit the whole process. Just subscribe there.
Absolutely. Rick, pleasure.
My pleasure.
Thank you.